Hello there, this is Samuel from LS Financial, and today is the 31st of March 2017, and my current time here is 6:54 p.m. I would like to share a little trade here with you guys on the Australian dollar, Japanese yen. This currency pair has been in a downtrend, typically following this trend like so. Okay, so you realize that it formed resistances near the trend line, and after it formed resistance at the trend line, it bounced back down. Okay, and that is all what it has been doing. But quite recently, you realize that this long-term trend line, or this current trend, which looked like started somewhere somewhere about November 2014, realize that we are at the south side, at the north side of this current trend line. Okay, so that is a sign of probably a reversal trend. Now, we are not too sure if a reversal trend is going to happen or not, but we do know that the market moves in waves, as it has been doing. You realize that from here it created a lower low right here, then created a higher high. This high was higher than this, and it fell down to a low lower than this, created a high lower than this. So it basically created lower lows and lower highs. So regardless of the trend, we know that the market moves. So what we know that could happen is is that this currency pair is more than likely going to wave in the opposite direction if indeed this currency pair is going to reverse into the or is going to reverse in the next direction or in the upward fashion. So what we would do is that we will look at the most recent rally from here and realize that this market had created a higher high here, created a higher low, then shot right up. So there is a higher chance that this market would more than likely fall down a little bit, regardless of whether this pair is going to reverse or not. We know that this market is due to fall, and now, should in case this market fall, there is a high chance that this market is going to fall way down to this level of resistance. Okay, as the market always moves in a certain fashion. Okay, so the market moves in such a way that when there is a rally, it rallies to the nearest level of resistance, and when it's going to fall, or when it's due to fall, it falls to the nearest level of resistance or support, depending on the direction of the market. Okay, so what I think would happen is that this market is due to fall to the nearest resistance, which is around 81.50. So let's point that out right here. 81.50 is our targets for the next couple of days. Now, this is the current market is around 85, so we are looking for about 350 to 400 pips of opportunity on this currency pair alone. Now, this is the weekly time frame, and we would want to take trades on the daily time frame or the lower time frame in order to reduce our loss, our risk. Okay, because for each trade you are supposed to quantify the amount of risk should in case the trade doesn't go your way. And currently what we see here is we see the markets most recently creating lower lows. We have taken all these lows. Let me point that out real quick. We have taken out all these lows. Okay, we took out this lows quite recently, so there's a high chance that this market is going to fall. So now what we will be looking out for is that we'll be looking out for counter trend line breaks. What do I mean by counter trend line breaks? Now we know that this market, since we have established that this market would on the more chance move south, what we do is that we draw trend lines across the highs of, across the lows of each candlestick. And when we find any of the candles at the south side of the trend lines, it means it's time to sell. Basically, it's telling us that the upward or the retracements of that currency pair is over. Okay, so when we draw this trend line right here, this red trend line would be our counter trend line. And we realize that this market, let me get that back up. Realize that this market is almost closing with the candle at the south side of this trend line. What it basically tells us is that it's basically time for selling. So if this trade should work out, we are looking at selling this currency pair at the close of the day, because this is the daily time frame. So we are looking to take positions or start looking for appropriate positions and trading until we get to our target way down at 81.50. So that is my little trade for you guys. We hope you had some level of insights as to how a trend or how to find trends or trades moving from the weekly time frame to the daily time frame. Okay, and ultimately trading the lower time frames regardless of whichever trader you are, whether you're a scalper or you are an intermediate or a medium term trader or a long term trade. Okay, so thank you so much for listening, and do well to leave a comment or any suggestions or anything of that sort to help us create more videos of this nature. Thank you, and do have a great week ahead.